Okay, 11 a.m. Central European Time. Warm welcome to all of you. Thanks a lot for signing in this Win Globally webinar today on the topic VAT on inbound supplies to Europe. Let me just do a quick introduction of Win Globally. So Win Globally is a network of independent accounting firms and tax firms. We are covering currently a little bit more than 35 countries worldwide, with a clear focus in Europe, Eastern and Western European countries, and Asia, but also a little bit of the North America. Key business of all the member firms. This is the services you can expect in all of our countries is definitely bookkeeping, payroll services, and tax compliance services. And if you wish to see more information about Win Globally, about us, then just have a look on our website, winglobally.ch for Switzerland, and there you can get additional information. And don't forget to follow us on LinkedIn, of course, on Facebook, and last but not least, also on Instagram. We just started that recently. So my name is Mathias Niehaus. I'm partner of NHS in Germany. We are an accounting firm, an audit firm based out of Düsseldorf, providing accounting, tax, payroll, audit, and also other business consulting services with a clear focus on international clients, and of course also follow NHS on LinkedIn. This is of course important for us and would help us a lot. So let me introduce you to today's speakers. So I'm quite happy and proud that we were able to convince Dr. Matthias Oldiges to speak for us about these VAT topics today. So we are working with him and his firm for quite some time, and actually, of course, we are also providing VAT services, but always if it gets a little bit more detailed and more complex, then we are really happy to have here real VAT and custom duty experts. So Matthias is attorney at law, partner at KMLZ. So a little bit, be happy that it's just an abbreviation, because the long version probably nobody will be able to pronounce. Matthias is a well-known speaker for VAT, is an expert on VAT, and is also associate lecturer at the University of Munich. So before we start, some organizational things, and very important also a little bit very short marketing block for the next Win Globally webinar held by our colleagues from Italy, from LG Consulting in Rome, about electronic invoicing and the date. So there I need to read it so that I do not make a mistake. September 20th, 2023. So please save that date already now, and then you will get an invitation to that as well. Besides that, the information for you, we will record this webinar and we will make it available after the webinar was held. If you wish to raise questions, please do that. You have the chat. You can do that, and I will have a look at the chat and try to raise as many questions to Matthias as possible. And last but not least, everybody, all of you will receive the presentation afterwards, after the presentation. So you don't have to write anything down. And last but not least, very important, also our contact details will be on the last page of this presentation. So you can contact us, of course, also afterwards via email. Matthias, I hand over to you. Basically, the idea is Matthias will be the speaker, I will probably raise a couple of questions if I have some, and to make it a little bit more lively. And yeah, let's go.
Thank you very much, Matthias, for the friendly introduction. Yeah, hi to everybody. My name is Matthias, as already introduced by Matthias. Yeah, I work at KMLZ. I'm for, I would say, 10 years. I became a partner, and yeah, KMLZ has a strong focus on VAT and customs matters in Germany. My personal focus is e-commerce. Therefore, I'm very happy to present some famous VAT topics in the e-commerce sector today. And yeah, as Matthias already outlined, please feel free to raise your questions at any time. Yeah. Okay, let's get started. The agenda for today is Chapter 1, supplies of goods to customers in Germany via online shops. And the second chapter, supplies of goods to customers in Germany via online marketplaces. Why do we have to make a strict distinction between online shops and online marketplaces? The reason is that the VAT rules differ significantly. And the last chapter is supplies of services to customers in Germany. Focus for today's webinar are inbound supplies. Yeah? Supplies of goods from third countries, for example, China, to German customers, and also supplies of services from a supplier based in China, for example, to customers in Germany.
So
Okay.
just a quick question, Matthias. So there is a big difference between the VAT rules for supplies of goods and supplies of services, right? In the VAT law. I think this is important to notice, right?
Yeah, correct. And we start with the supplies of goods. For example, you sell shoes from China to customers in Europe. This is a good example. And then we have to make a clear distinction between the B2B cases and B2C cases, because as of 1st of July in 2021, we had some simplifications rules for B2C cases. Let me explain it here. A supply of goods in a B2C scenario is treated like a distance sale. And the distance sale applies, you can see it on this slide, if goods are supplied to a non-taxable person and are transported from a third country to a member state, and the transport is arranged by the supplier. So the cases that the supplier based in China supplies or sells shoes to a customer, to a private individual in Germany, and the shoes are shipped from China to Germany. And in this scenario, we have a specific simplification. This is called import one-stop shop. It is a new regulation, a simplification tax procedure established in 1st of July 2021. And it allows the Chinese supplier to declare the distance sale in a special tax procedure. It's a simplification. The Chinese supplier needs an additional identification number. He has to apply for this number. This number will be issued by the responsible customs office in Germany. And the very big simplification is that the import is zero rated. This means for the shipment from China to Germany, no import VAT is due if the supplier uses this simplified tax procedure. And also no customs duties are due, because we have a exemption for goods with a value under 150 euros. Therefore, in principle, the Chinese supplier can ship the goods to the German customer without any import VAT and without any customs duties. And the big advantage is that no VAT registration in Germany is necessary. So this is a big simplification, but please keep in mind only for B2C cases and only for goods with a value under 150 euro.
Quick question, Matthias, if I just may ask. So you said it's just for private customers, so it's B2C.
Yeah.
How would you say to distinguish whether this client is or this customer is a private person, also a C, or is B2B? So is there anything like would you use then the VAT ID number or something as an evidence, or?
Yes. Normally, the customer has to register on a web shop or an online shop in order to in the order process. Yeah, and then if the customer does not provide a VAT ID, the Chinese supplier can assume that the customer is a B2C customer. However, if the customer provides a VAT ID, there's a simplification that the Chinese supplier can assume that the customer is a business customer. So the usage of the VAT ID is decisive in this case. Yeah.
One more question. Quite often I hear questions like, but we are just sending a very small number of shoes, right? So is there any threshold? Because actually for this distance sales in Europe, when you do it in Europe, there is this 10,000 euro kind of threshold, right? For this.
Yeah.
But coming from third countries, there is no threshold, isn't it?
No threshold. The 10,000 threshold, you can see it on this slide here, only belongs to sales within the EU. Yeah, but when we talk about shipments from third countries to Germany, the threshold is not decisive. We only have to check whether the value of the goods is below or higher than 150 euro.
Got it.
Okay. Let me shortly provide some further information with regard to the import one-stop shop, the simplification for tax procedure. The import declaration is done by just providing the import one-stop shop number with the customs declaration, and then the import is zero rated. And the following supply of goods to the supplier. Then, I will show you in another case. Then, if you use the import one stop shop procedure, then the following supply, for the following supplies, the rules for the normal rules for German VAT applies. But in this case here, you use the import one stop shop, and then no taxable supply in Germany is necessary.
But what is, just a quick question, but that's in Germany. So, but let's say the importation is done in Germany, so then it is tax-free, exempted, zero rated, as you said, also for custom duty, right?
Yes, because we are below 150 euro, correct?
Exactly. So it's basically the import tax, import VAT free and custom duty free. And then if it's then sent, let's say, to another EU country.
Yeah, then you the zero rating for the following supply can apply. Yeah.
Okay.
So, but you can, of course, the import one stop scheme is EU-wide. Yeah. So in some cases, the goods are not imported in Germany, but rather in the Netherlands, for example, or in let's say in France. And you can also use this import one stop shop scheme because it's a tax procedure which applies EU-wide.
But with one registration, right?
Only one registration, yeah.
Okay.
So the supplier from a third country can choose the member state where he wants to register for the import one stop shop. Okay, but this is a free choice of the supplier. It is not mandatory to use the import one-stop shop. The supplier can opt for this simplification, but can also opt for the normal tax procedure. And please keep in mind, the normal tax procedure also applies if the value of the goods is higher than 150 euro. So there are certain requirements for the import one-stop shop, shipment from third country to B2C customer, and the goods are below 150 euros. Mm-hmm. So in this case, the Chinese supplier is not obliged to register for VAT purposes in Germany. However, if the goods are higher than 150 euro, the normal tax procedure applies. That means that the supplier is required to register here in Germany for VAT purposes.
And not only in Germany, right? And then in that case, if this Chinese supplier sells also to Belgium, the Netherlands, and France, in all these countries,
Correct.
VAT registration is necessary, right?
Correct.
Followed not only registration, filings, and so on. So a lot of compliance stuff.
A lot of VAT compliance. Correct. Yeah.
Yeah. Okay.
Yeah. All right. Okay. This is the B2C case and the simplification for goods with a value below 150 euros. Let's have a look.
Just one thing. Just one thing comes just in my mind. Actually, sorry, but. So that means basically an option would be then to have a subsidiary maybe somewhere in Europe to basically where the supplier sends the goods to. And this subsidiary is then sending via the online shop the goods to the customers in Europe. Because then, again, we have the distance sale method. Doesn't matter which price or which value the goods have. Yeah. And then basically, again, one registration and the usage of this one-stop shop is possible then for the all the online sales within the European Union.
Yes.
Again, only one registration.
Yeah. Proper solution. Yeah. Very good. Mm-hmm. Very practical solution. Yeah. So you have one subsidiary here in Europe, and you ship all goods to the subsidiary in Europe, and the subsidiary then forwards the goods to the customer. Yeah.
Okay.
Good scenario. Yeah.
Thanks. Mm-hmm.
All right. Okay. Let's have a look to the B2B cases, and hopefully you remember the simplification does not apply for B2B cases. Therefore, for these cases, we are in the normal tax procedure. Let me shortly explain the case here. We do have a Chinese supplier, a CPU factory, which sells CPUs to customers in Germany. And here we have to make a clear distinction whether the supplier or the customer is responsible for the import declaration in Germany. Because the VAT treatment differs. In this case, the customer is responsible for importation. And let me shortly explain the VAT treatment. The supply from China to the customer in Germany is zero rated from a VAT perspective. However, when the goods cross the border to Germany in this case, import VAT is due. And the import VAT is 19%. And as the customer is responsible for importation, that means the customer goes to the customs office and declares the importation, then the customer is liable to pay the import VAT of 19%. Okay? And as the customer uses the CPUs for business purposes, the customer is entitled to deduct the import VAT as input VAT. You can see it here. The customer is liable for import VAT 19% and, however, can deduct the import VAT as input VAT. So from a VAT perspective, this supply is neutral. And this is what VAT should be in B2B cases. No VAT is due.
I think this is very important also when we talk to our clients. Maybe so. Therefore, I just maybe want to repeat that once again, because this is really key. When we talk about the VAT, then we always talk about VAT and input VAT, right? So the VAT payment to the tax office and the input VAT, what you get as a refund, right? You pay the VAT and you receive back the input VAT. And the input VAT should not be, is not the same as import VAT, right? The import VAT is again existing as VAT and input VAT, right? So basically you pay the import VAT once you do the custom clearance and you receive back as a refund the input VAT. So maybe just to repeat that, because I quite often have the experience, it is difficult to understand.
Yeah, it is correct, Matthias. Yeah, and in this case, you pay the import VAT at the customs office, but you apply for the input VAT at the tax office. So we have two different offices here in Germany. Yeah. Okay. This is the alternative, that the customer is responsible for importation. And this is the VAT treatment I described a minute ago. I think we can skip it here. And let's have a look to the case where the supplier is responsible for the importation. And this is, it's much more complicated, but let's have a look. The case is the same. The CPO factory ships the goods to the customer in Germany. And here, the supplier is responsible for importation. That means the supplier or the freight forwarder arranged by the supplier declares the importation in Germany at the time the goods cross the border. Therefore, as the freight forwarder declares the importation in the name of the supplier, or the supplier itself declares the importation, the consequences are that the supplier is liable for the import VAT. Import VAT 19% in Germany. Okay, and then we have a special rule in Germany with regard to the VAT. Because since the supplier is liable for import VAT, the place of supply for the VAT is shifted from China to Germany. That means the following supply from the Chinese supplier to the German customer is treated to be in Germany. Therefore, the CPU factory is liable for German VAT, for the supply, for the shipment to the German customer. Okay, in sum, the Chinese supplier is liable for import VAT due to the importation, and the Chinese supplier is liable for VAT, 19% VAT, because the place of supply is shifted from China to Germany. The Chinese supplier can, of course, deduct the import VAT. You can see it on this slide. The tax office refunds 19% import VAT. And if the customer is a business customer, the customer can deduct the input VAT in Germany. Therefore, also in this case, if this case is a B2B scenario, it's neutral. The difference is that we have two payments, import VAT and VAT, and we have two deductions, one for the import VAT and one for the VAT. But just to compare these, this is much more simple. Yeah, the customer is responsible for importation. However, according to my experiences in e-commerce cases, from a customer perspective or a customer experience, it's not good that the customer is liable for importation, because there are a lot of duties, obligations at the customs officer. Then the normal case is that the supplier is responsible for all the customs obligations. And then this is the VAT treatment, which is, to be honest, not that easy.
As we usually tell our clients, maybe not only in an e-commerce environment, but also in a normal business environment, in these cases, to avoid that, to be honest, because of course it is connected with the registration. So the supplier, the Asian supplier, has to register for VAT in Germany in that case, right? And to do with all the filing responsibilities you have as a regular VAT taxpayer in Germany or in Europe. This, of course, must be done. So we always tell our clients usually don't use, because this is what the logistics people always talk about. Don't use DDP. Because actually this is not duty and the DDP. I forgot actually, but it's basically also the customs is done by customs clearance is then done by the supplier.
Yeah.
So we always tell our clients usually better use DAP or FOB, where the customs clearance responsibility remains with the customer.
Yeah. Yeah, I mean, from a VAT treatment, this is easier. Yeah. However, when we talk about B2C cases, it can be problematic, because if it's a B2C customer and the customer only receives the shoes, for example, shoes with a value of 200 euros, the customer only receives the shoes when the customer goes to its customs office, pays the import VAT, and then receives the shoes. It's from a customer experience, it's not that good. Yeah.
True.
However, in B2B cases, it is no problem for the business customer to go to the customs office. Yeah, or there can be some simplifications. Yeah, but yeah. I mean, you can see it on the slide. It's not that easy. It's not that easy to handle, and a lot of Chinese suppliers are not aware of this VAT treatment, that the place of supply for VAT is shifted to Germany. Yeah, because the normal rules are the place of for the supply of goods is where the shipment starts, and this is in China. However, as the supplier is responsible for importation, the place of supply for VAT is shifted to Germany. This is a special rule outlined in Section 3, Para 8 of the German VAT Act. And we do have the rule in other member states too. This is not a German rule. This is a rule based on the European VAT Directive.
Also in my experience, it makes definitely a lot of sense before you start doing business, and also after some time to do it, or at least periodically to do an update about the VAT assessment of the transactions what are done, just to make sure that nothing goes wrong, because with VAT it's ongoing and the amounts can be quite high, become quite high when you do a certain mistake repeatedly. So therefore, it's really because there are so many different rules and specialties. Who is the transporting party, and so on and so forth. So definitely makes sense.
Yeah.
Okay.
One remark: we only talk about Chinese supplier. I mean, it can be a supplier from the US or from the Switzerland. Supplier from a third country.
Yeah. From a European point of view, third country, yes.
Correct. Thanks, Matthias.
Okay.
Okay. Let's discuss the cases where the supplier does not sell the goods via an online shop, via an own website, but uses online marketplaces, for example, Amazon, eBay, etc. The online seller places an offer on Amazon and is willing to sell the goods to German customers, for example. Also, in this context, we have to make a distinction between B2C cases and B2B cases. As you can imagine, the rules differ significantly. So let's start with the B2C cases. And there we have a special scheme established 1st of July in 2021 in order to avoid tax evasion on online marketplaces. To explain a high level, in some cases, chain transaction is a fiction of a chain transaction applies. Therefore, although the supply is rendered between the online seller in China and the customer in Germany, from a VAT treatment, this transaction is treated as the supplier renders a supply to the marketplace, and the marketplace renders a supply to the customer. And what is the reason? The reason is to avoid tax evasion on online marketplaces, because in the past, we had a lot of problems with online sellers from other countries, which did not or were not VAT compliant. Yeah, they were obliged to register in Germany for VAT purposes, but they did not. And and the German tax authorities had a lot of problems to find the online sellers in China, for example. Yeah? And therefore, it was an EU-wide reform, meaning that in the scenario where import of goods from a third country with a value under 150 euros and a customer is a B2C customer, in this scenario, this fiction of a chain transaction applies. Therefore, the Chinese supplier renders a supply to the marketplace, and the marketplace then renders a supply to the German supplier. In this scenario, the online marketplace becomes liable for VAT.
And so maybe because I have a little bit always the experience that it's difficult to understand this chain transaction. Mm-hmm. So maybe just to repeat that, so this is a direct shipment, right, from the supplier to the end customer.
Correct.
The goods goes directly from the supplier to the end customer, mm-hmm. But the invoicing is going the way supplier, marketplace, end customer.
Correct. It's in principle, it's a direct shipment from China to the German customer. Mm-hmm. But this transaction is deemed to take place as follows: Chinese supplier to the marketplace, and from marketplace to German customer. Mm-hmm. Yeah, but only for VAT. From a civil law perspective, it's a shipment from China to the German customer. Yeah, it's only a deemed supply from a VAT perspective. And in this scenario, we have several options. One option is that the online marketplaces uses the import one-stop scheme. Yeah, you remember? Because the online marketplace is now involved in this transaction and can make use of the import one-stop shop. The result is that the importation for the online marketplace is free, zero rated, and the online marketplace has to declare a local supply to the German customer. And what are the consequences for the online seller? No consequences, because the supply from the online seller to the marketplace is not in scope of German VAT. So this is a good, very good solution for the online seller, because the online seller has no VAT obligations in Germany. Only the marketplace has a VAT obligation in Germany. And this is, from a perspective of a German tax authorities, very good result, because, I mean, the online marketplace, when we talk about the big ones, they of course pay the VAT to the tax authority. Yeah. So in this scenario, if the online marketplace makes use of the import one-stop shop, there are no VAT obligations for the online seller. And I can tell you, the big online marketplaces in Europe make use of the import one-stop shop. Yeah. Okay, scenario 2. The online seller transfers goods into customs-free circulation. That means the online seller is responsible for the importation here in Germany via an indirect representation. And also, in this case, there are no VAT obligations for the online seller. You can remember the cases which we discussed before. If the online seller is responsible for the importation in Germany, the place of supply for the goods is shifted from China to Germany. However, in this scenario of a chain transaction, the section 3 para 8 does not apply. That means that also in this case, the online seller is not obliged to declare an VAT transaction here in Germany. So no VAT obligations for the online seller. Good result. And this is exactly the result which the EU Commission wants to have, yeah, because the online marketplace is the debtor for the VAT, not the online seller. Okay, but keep in mind, this simplification or this chain transaction only applies in cases when we talked about goods with a value below 150 euro. Yeah, if the goods increase the amount of 150 euros, the normal tax rules apply.
And B2C.
Correct.
And
yeah.
It should be a B2C situation, right?
Correct. I will show you now in B2B scenarios, B2B supplies via an online marketplace, the normal rules apply, the rules which we discussed before. So we have no fiction of chain transaction. Then we, in this scenario, we have to make a clear distinction between, the question is relevant, is the customer responsible for the importation or it is a supplier? In this case, it is the customer, and you can remember, in this case, then no VAT obligations for the supplier here in Germany. However, if the supplier is responsible for importation, then the supplier has to register here in Germany for VAT purposes, because the place of supply is shifted from China to Germany.
Maybe just to repeat it, because I think this is so important.
Yeah.
So basically, the place of taxation is always there where the transportation starts.
Correct.
In our example, in China. So taxable, at least from a European point of view, it would be taxable in China. Whether this is taxable in China, we don't know, but basically it's not, in other words, it's not taxable within the EU, right?
Yeah.
But if the supplier is responsible for the customs process, the customs clearance, then again, this section 3, paragraph 8 comes into place. The place of taxation is shifted from Asia, in that case, to Germany, with all the registration needs, and so on and so forth.
Yeah. So if we have a short look on the agenda, it is very important to make a distinction between, is the online seller trading via its website, or uses an online marketplaces? And in both scenarios, we have to make a distinction between, are we talking about goods below 150 euros or higher than 150 euros? Yeah, because the VAT treatment is different. Yeah? Therefore, it's very important to challenge these cases before you sell the goods to German customers.
And again, then afterwards, still, and then also to look at, is it B2B or B2C, right? So this comes into addition.
Yeah, correct. Yeah.
Okay.
Yeah. So VAT is always not that easy. Yeah. But yeah. All right. Any questions in this context with regard to supplies of goods?
I don't see. There was one question, but that is already we already answered, so I think we can move forward, leaving the supply of goods and moving on to the area where we are very comfortable with, right? So basically, as consultants, as tax consultants, right? So basically, we are talking now, or you will talk about the supply of services, right? Another very, as we said in the beginning, very important distinction with always in VAT in Europe is, are we talking about the delivery of goods or the delivery of services?
Yeah. So, and when we talk about services, the problem in practice is always, where's the place of supply? Yeah, because we have different rules for the place of supply when we talk about supplies of services. Okay, let's have a look on this case. There's a Chinese lawyer, Tian, who advises the German entrepreneur Bastian from Berlin. Okay, it sounds very easy. Let's have a look. Okay, as we do not talk about goods, the transaction is treated to be a supply of services. Okay, for consideration, yes, because Bastian pays money to the Chinese lawyer. And it is a service supplied by a taxable person within the scope of his business. Yes, Tian is a Chinese lawyer and advises his client Bastian. Okay. In general, the question, where do I have to tax this transaction? Then we have to check where's the place of supply. And when we talk about supplies of services, we have to make a distinction on whether the supply is rendered to a business customer or a private individual. In a case of a B2C, the place of supply is there at where the supplier is established. Yeah. And in this case, Tian has its registered office in China. Therefore, according to the German or European VAT rules, this supply of services is taxable in China. So we can say out of scope of German VAT.
So the first question, that means the first question of Tian should always be to the client in Berlin or wherever, send me your VAT ID.
Correct. Yeah.
Mm-hmm.
Yeah. I mean, this is a normal case, yeah? Send me your VAT ID. I mean, if the Chinese lawyer Tian advises, for example, Henkel or Mercedes, yeah, I mean, no VAT ID is necessary because everybody knows Mercedes or Henkel is a taxable person. Yeah? But there are cases where it is not that clear. Yeah. So
absolutely, basically there are companies in Germany, especially when we are talking about the SME sector, where the name of the company is basically like a family name or something, right?
Correct.
And if you don't know, exactly, then it's of course difficult to judge. So therefore, basically, it's always just recommendable. Ask for the VAT ID. If they have one, then you can assume it's an entrepreneur, it's B2B. If they don't send you that, for whichever reason, I would personally tell you, probably you say it's a individual, so it's a customer. It's a B2C business.
Yeah. And in a when it's a B2B scenario, the place of supply is shifted to the place where the recipient of the supply is established. In this case, where Bastian has its registered office, and this is in Berlin. And the consequence would be this supply is within the scope of German VAT. Yeah, you can see the distinction here. It's always a question, where's the place of supply? When we talk about supply of services, we have to make a distinction between B2C cases and B2B cases. In a B2C case, the place of supply is where the supplier is located. In B2B cases, the place where the recipient is located is relevant. We do have some special rules, but the general principle is outlined in section 3a, para 1 and para 2 of the German VAT Act. Okay, then the other question, okay, back to our case here. So we do have a B2B case. So the place of supply is in Germany. The next question is, okay, who is liable for the VAT? Who is responsible to make the VAT payment to the German tax authorities? And in principle, it is always the supplier, because it's an indirect tax. Therefore, the customer makes the payment to the supplier, but the supplier is responsible to forward the payment to the tax authority. So this is the principle. However, in B2B cases, there can be an exemption. I'm pretty sure that some of you guys have heard about reverse charge mechanism. What does this mean? This means that the VAT, the responsibility to make the payment to the tax office is shifted to the recipient. You can see it here. Normally, this is our case. Normally, the Tian is responsible to make the payment to the German tax authorities. This would require that the Chinese lawyer, Tian, needs to register in Germany for VAT purposes and provides tax declarations to the tax office. This is not, practical. Yeah, in order to simplify the matters, in this scenario, the responsibility to make the payment to the tax office is shifted to Bastian, as Bastian is a business customer, and it should be no problem for him to declare the supply in its VAT return, because as a business customer, he is registered in Germany, and he declares VAT returns on a monthly basis. Therefore, this is no burden for him to declare this supply of services. And this is a simplification rule. Yeah?
Mm-hmm. Maybe just one comment to that, which is this is or two. The one thing is also this has no cash impact, right? Because this reverse charge mechanism leads to the fact that you have a payment of the VAT and you get the refund in the same filing, right? So basically it's offsetting itself. And so therefore it's a zero payment actually. It's just a pure filing obligation. In case you are fully allowed to get a refund of the VAT, of the input VAT, but this is a different case. But in general, it is completely neutral, right? And the other thing is also maybe for the audience interesting, because this concept is especially used in the European Union. When you do services, companies do services from one country to a customer, business customer in a different EU country. And then it's always a reverse charge mechanism. And this is one of the few things which are in the EU VAT directive completely harmonized, to my understanding. Please correct me if I'm wrong, but this is completely something you can trust on. And then it's basically always that you don't have to register in the other country if you are doing services to this country. So maybe just a little remark to that from my side.
Yeah, good remark, Matthias. And the reason for this simplification is that this avoids tax fraud. Yeah. Because the Bastian will only get the refund, the input VAT, if he declares the VAT to its tax office. Yeah, therefore it's neutral from a tax perspective. If Tian would be responsible for the VAT payment, the tax office or Bastian's tax office would refund the input VAT, although the tax office does not know if Tian did make the payment. So in order to avoid tax fraud, the reverse charge mechanism is a very good tool. Yeah.
And it's getting more and more important, right? So basically it's used more and more intensively, right?
Yeah, correct. And the big advantage is for Tian. Tian is not obliged to register here in Germany for VAT purposes. This is very good simplification. You can see the consequences here outlined on this slide. Taxation by the recipient Bastian, input VAT deduction in the same VAT return in which VAT liability is declared. This is the cash flow advantage Matthias described a minute ago. And of course, the invoice may not show any VAT. Otherwise, there can be a VAT liability due to incorrectly issued VAT. And the invoice should mention a reference to the reverse charge mechanism. However, in practice, in many cases, the Chinese supplier will not issue an invoice or only an invoice 10,000 euros. And it is the responsibility of B to declare the reverse charge transaction. However, there from a criminal tax law perspective, there is no risk for B, because if B misses to declare the transaction, because on the one hand he is liable, but on the other hand he has a right to deduct the input VAT, so it's neutral. There is no underpayment to the tax office. But this is only from a criminal tax law perspective. From a purely VAT perspective, B is of course obliged to declare the reverse charge transaction in its German VAT return. All right, I think. Yeah. Good timing, yeah.
Absolutely. And I already have one question from the audience to you, Matthias. Mm-hmm. So the question is, a distributor in the Netherlands is selling goods to a private person in Germany. Mm-hmm. Which VAT does apply? The Dutch VAT or the German VAT?
The German VAT, because also in these cases, you can see it here in the distance sales rules apply. Here, a distance sale is goods are supplied to a non-taxable person, yes. And then in gray, the goods are transported across borders either within EU. This is our case. And the transport is arranged by the supplier. So when the shipments increase the threshold of 10,000 euros, the transactions are taxable in Germany. However, the supplier can opt to German VAT with its first shipment. Yeah. The supplier can say, okay, yeah, I'm not willing to monitor the threshold. My transaction should be taxable in Germany with the first euro. Yeah? And then the supplier can, of course, register in Germany for VAT purposes. However, he can make use of the one-stop shop scheme. This is a simplification. Yeah? He can apply in the Netherlands for using the one-stop shop scheme. And with this simplification, simplified tax procedure, he can avoid a VAT registration in Germany. Although the supplies are taxable in Germany, he is not obliged to register in Germany for VAT purposes if he makes use of the one-stop shop scheme in the Netherlands. Yeah, it's a very good simplification. Yeah.
Maybe two things to that, just to add, because that has changed from July 2021. So this threshold of 10,000 euros is for all sales all over Europe together. So because before there were lots of these amounts, but with Germany, with France, with Italy, right? And you had to look at that individually, country by country. But now, as soon as you are doing more than 10,000 euros to some other European countries, then basically you are in here. And the other thing is also maybe one thing which could be relevant, because of course you file them in the Netherlands with one-stop shop. Nevertheless, there's one thing from my point of view always missing information is there a reduced tax rate maybe on that in Germany? So because of course we have 90% or 7%, right? And this is of course something you don't know sitting in the in the Netherlands, whether is a book now reduced, yes or no, right? Also these kinds of things. Nevertheless, then you need to probably ask someone in Germany in that case to make sure is maybe a reduced rate applicable, and that is in all pretty much all European countries, I think the same.
Yeah, yeah. Good remark, Matthias. Don't forget the supply is taxable in Germany. You are only allowed to declare this supply in the Netherlands via the OS scheme, but the invoicing, the VAT rates, etc. Are German. Our obligations in Germany. That means you have to monitor VAT rates, invoicing requirements within the EU, where your customers are. Good remark.
Absolutely. We get more questions. Here's one question about reverse charge mechanism, and basically reverse charge mechanism apply if crossed a specific transaction euro amount or for all transactions? Yes, for all transactions. So there's no threshold at all existing. Okay, so that is answered. Then the next one, there's another question about B2B. Whether the invoice from China should mention the VAT ID from the German buyer. This is a good question. This is really a good question.
Okay, in which scenario?
Probably I would say it's the case, the customer. I would say, it's probably B2B. Obviously B2B, and then I would probably say customer is importing.
Customer is importing. Okay, this one. In this case, the supply or the place of supply is in China, where the good shipment starts. Therefore, the invoice requirements are based on Chinese law. Okay. From a German perspective, we cannot answer this question.
Nothing, yeah, absolutely. But from a German perspective, we would say, okay, no, definitely no, the VAT ID from the German buyer is not necessary.
Correct.
But I would say also in the other case, right, when the supplier is providing here, is taking care about the import. So even then it's and let's assume it stays in Germany. So then it's import VAT, of course, liable to the supplier. But then we have a domestic delivery to the customer in Germany, and for domestic deliveries, no VAT ID is necessary. Not the VAT of the recipient of the goods is necessary. Only the own VAT ID must be in the invoice. Right?
It's in the formal invoice requirement is that the invoice states the German tax number or the German VAT ID of the supplier, but not of the customer.
That would be only the case that after the import to Germany, then the goods would be sent. Now we are leaving a little bit different. We come to different stories, but would be delivered, let's say, to the Netherlands from Germany, so that we would have a intra-community delivery, which is also zero rated. But then you need the VAT ID of the recipient.
Correct. In cross-border scenarios, you need the VAT of the customer, and also in the scenarios of the reverse charge here.
True.
An invoice requirement is that you use the VAT ID of the customer, but not for purely importation of goods.
Okay, so the last question, what I see here is whether the audience will receive the presentation and the contact details. Clearly, yes. As mentioned in the beginning, we will circulate the presentation after the webinar to all the registered email addresses, what we have. So this is for sure. And then basically, would you be able to help us with the legal VAT accounting framework of mandatory items for German companies? I would say clearly yes.
Sure.
So basically, just contact us, and then we definitely will be able to support you. And there's another question. What if the Chinese supplier service e-commerce product, software. Now we are talking about software, right? We are supplying software. So we are in a service situation from a Chinese supplier to a private customer in the EU. So it's B2C supplies from China to the EU. Yeah, interesting. Of course, good question.
Okay, we have to be very clear. What is the kind of the services? It's just the software, so it's an electronically supplied service?
That's what I would assume here. Here's written in brackets, it's software. So I would assume maybe we are in a situation of maybe downloading an application on a mobile phone or something.
Okay, then we do have special rules normally. In section 3a, paragraph 5, sentence 2. That means the place of supply is always where the recipient is located. And this is a big problem in practice, because the Chinese supplier has to prove that its recipients are B2C customers and are located in this member state. So he needs to provide some proofs. But this is, to be honest, this is a question we need to verify in detail, because the distinction between electronically supplied services and the normal service is, it's not that easy in practice. So the question is there any human intervention in this context? And this is, I can say there are some special rules for electronically supplied services, but we have to verify in detail what is the kind of the transaction.
But it's interesting, but there might be also this the one-stop shop coming into place again, right? In that situation.
Sure, yeah. For the you can, of course, as a supplier from third countries, you can use the one-stop shop for every services you render to German private persons. Yeah. But this requires, of course, that the place of supply is where the customer is located, and then you can decide which taxation procedure you want to use. Yeah.
Okay, so I don't see any additional questions so far. So basically, and it's already 12:05. So yeah, I would say thank you, Matthias. I think
Thank you,
that,
Matthias.
for me,
It was a
that
pleasure.
was a big pleasure, and it was fun to do that together with you. And thank you very much to the audience. So the attendance was great. So we are really happy about that. If you have any question, please contact us with the contact details you will receive in the presentation. And don't forget to follow us on LinkedIn and Facebook and Instagram. And yeah, hope to see you guys again soon. And have a wonderful day. And we say bye-bye. Matthias?
Thank you and bye-bye.